In the second half of this video series about the Insurance Contracts Act amendments, NIBA legal counsel Mark Radford runs brokers through other important alterations, including changes to the duty of disclosure.
There is a change to the duty of disclosure notice obligation on the insurer. Now, you'll all be aware that where a broker is acting for the client, the insurer doesn't have the obligation to give the Section 2022 duty of disclosure notice, okay? But there are changes where they do, and they are in effect, they've got to notify the insured in the notice that the duty applies up until the time the contract's entered into. What a lot of people forget is that the duty doesn't stop when someone puts in the application. It continues up until the time the contract's entered into. So if something happens in between that time, the insurer can rely on non-disclosure. So that's a key thing for brokers to remember. The main change is in relation to the duty of disclosure on renewal. Currently, the 21 duty applies to insurers for eligible contracts on renewal, which is just the general duty, not any obligation to ask specific questions. What the government's done is they've said, no, we want you to do one of two things, or a combination. Ask specific questions, or give the insured a list of what you've asked in the past and get them to confirm it, or a combination of both. And if you don't do that, it can result in a waiver of the duty. So insurers are going to have to put in place new procedures to meet that requirement. So next topic is third-party beneficiaries. Third-party beneficiary is someone who is not the contracting insured to the contract. They're a person who is specified in the contract as being entitled to claim under the policy by the insurer, but they're not a party to the contract. I've said earlier as to how they're now able to access the duty of utmost good faith and the relevant protections there, and they're also covered by it, but that's an important development. Two other important developments. One is the legislation, Section 48, clarifies that if a third-party beneficiary makes a claim, any misconduct by the insured, for example, breach of the duty of disclosure, will equally impact on the claim by the third-party beneficiary. Another important extension in relation to third-party beneficiaries is, like the insured, they have the right for liability policies to go to the insurer where a claim is made against them and ask the insurer whether they're prepared to accept the claim, and if so, whether or not they're prepared to take over the defence of the claim. And if the insurer doesn't respond, they can proceed and won't be prejudiced by that action. The final topic is subrogation. There are basic rules in the Insurance Contracts Act relating to who gets what, the Subrogation Recovery rules. These can be amended by agreement before in the contract or even after a claim has been made and either party are discussing recoveries. The impact of the new rules are that the person making the recovery action gets more back, legal costs and interests and things like that. And there are new rules in relation to joint recovery actions. So it's very important for brokers to look at the relevant policies and the relevant rules in the policy to make sure that they achieve the result you want to achieve for your client.